please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning and welcome to Trading Hour on CNBC TV18. I'm Ekta Batra, with me is Prashant Nair, and what a spectacular start to the week, not only for us but what's happening globally as well. So the Nifty is now comfortably above 10,750 and we have all of the indices which are in fact at record highs. So you're talking about the Bank Nifty, which is at 26,000. You're talking about the mid-cap index also, which is step in terms of the gains that we're seeing along with the Nifty. So it's turning out to be a fabulous start to the week. Let's see if this sustains, but right now the global momentum seems to be in favor of what the Indian markets are doing, not to mention that we have had important data from the IIP also, which has actually helped in terms of sentiment. If you're talking about stocks, it has to be all about financials this morning. So if you're talking about Capital First and IDFC Bank, Capital First at a record high, ICICI Bank, which is at a 3-year high, HDFC, which is approved fundraising there as well, and not to mention Muthoot Capital Services, which is reacting to that stellar set of numbers. So that stock up in double digits at around 15.5%. Hi, Prashant.
Ekta, hi, morning. And I was just thinking, we are still in early days of 2018, and people are still making predictions for the year. So let's not get ahead of ourselves. But I have to say, it's been a
maybe they're changing their predictions.
I don't know. I mean, because mostly people were predicting a good year for 2018. I mean, actually, we had, I think, the global equity strategist from HSBC, Surabhi, was telling me that they interviewed him on Closing Bell on Friday, and he essentially, apparently, told them that global equity markets are undervalued.
Oh my
Undervalued.
gosh.
I have not heard that for a long time. I sort of couldn't quite get the logic, but I'm sure there is one. But just a few points here in terms of what has happened. So the question which I think one is starting to wonder about is whether we've started a new phase, if you can have the graphics up, a new phase for global equity markets. When I say a new phase, I mean a phase where gains are becoming faster and faster. The momentum of gains is actually picking up even more as compared to 2016. So that is point number one. Global equity markets are off to their best start of the year since 2003. That's point number two. The question when one looks at the currency market, especially the US dollar, is this a correlation? Is risk moving up? I mean, risk doing very well. When I say risk, I mean stocks, etc. Our stock market is doing very well as USD weakness is playing out. I mean, dollar is under pressure against basically pretty much all the major currencies. Even Asian currencies are doing very well against the dollar. The dollar has reached its lowest level since the end of Fed's tapering in 2014. That's stocks basically. Now look at bonds, and bonds in the US is what I'm referring to. I mean, that's the biggest market by far. Bonds are having their worst start of the year since 2013. So where stocks are having the best start since 2003, bond markets worst start since 2013. The 10-year, US 10-year, the US 2-year reached 2% for the first time since 2018. This happened on Friday. I mean, typically in a traditional sense, you would say not good news. Yields are rising. Pretty much all kinds of lending in the economy is based on, bond markets, and what bond markets do has a bearing on, consumer rates for the consumer. The 2-year versus 10-year spread, even though 2-year has moved to 2, still remains at pretty much all-time low levels. Again, not that great news. And of course, with bonds selling off and yields rising, I think this debate has been on for the last 6 months, 8 months, that whether the traditional relationship between bonds and equity markets is broken off. Is it possible that even as yields continue to rise, stock markets continue to do very well, as has been shown by markets so far? But I think this is the one thing to watch. If bond markets continue to sell off, and if that sell-off continues, accelerates, even as stocks accelerate higher. Ekta.
Yes, well, so I have two words for this market right now: risk on.
Oh yeah, risk on, absolutely.
So let's actually get talking about the technicals of this market now. We have Sudarshan Sukhani joining in this morning to tell us what he's strategizing. So Sudarshan, over to you then for the Nifty. What would you be recommending, as well as your stocks right now?
Sure. Good morning again. We have been recommending consistently to be long in the Nifty, and last week we said the Nifty Bank is now changing its patterns. It's now coming on the fore, and be long in the Nifty Bank. Today morning before open, the same suggestion was given to buy the Nifty and the Nifty Bank at the open. Even at current levels, there is only one trade, and that trade is to be that trade is to be long in the markets. So you must understand that with every rally, every rise, the risk increases, and the potential for reward is also little less. But still you must be long. We don't know. We don't want to call a top here. Let the market ride as long as it wants. So that's a long statement on why we should be long in both the indices. Individual stocks are also offering the same opportunities. Any number of mid caps can be bought into for this show, and today Dabur is a buying opportunity. This stock has been outperforming and is breaking out from a very narrow range which lasted for a few days. Then Vedant is a buy. Metals are doing well, and Vedant is outperforming the already doing well sector. So Vedant is a buying idea. And Torrent Pharma, which has been giving us spectacular gains for the last few weeks, continues to do so. So three ideas to buy, but don't go short.
Don't go short. I mean, basically the advice, don't want to hazard a guess in terms of where the market peaks off, etc. But that's where we are at. I mean, I was talking about how the dollar is weak against currencies, global currencies, and what you have, and you got some action here in the dollar rupee market in India as well, the onshore market. Let's get some questions answered. Raj Kumar is the first person who sent us a query. He's got 150 shares of Titan purchased at 870 rupees. He wants to know whether to hold or sell. 870 is his cost. Sudarshan, what would you tell him?
Oh, I would tell him to hold. It's the price, current price is immaterial. Titan is outperforming the broad market, and it's in the right sector, the right company. In the next few years, you will be surprised at the prices you see in this stock. Hold on, don't do anything else.
Okay, all right. Sudarshan, before we get to the second query, I wanted to actually ask you about what your thought process is on the entire financial space vis-a-vis any other sector today. Are you just, do you think that somebody should just look at NBFCs or banks in today's trading session and not any other stocks or sectors, if in case that is something that they would be contemplating?
I think non-banking for NBFCs and private sector banks are good opportunities for the week. But beyond that, it is difficult to say. For a short-term trader, different sectors may come on the fore later. But at least for today and tomorrow, the focus should be even more on private sector banks. More than NBFCs, look at private sector banks.
Okay, fair enough. Well, let's get to that second query now. We have it from MP Narahari. 5 shares of Eicher Motors bought at 32,500. Wants to know the view on the stock with a 1-year perspective.
Well, the idea is to hold on, but for the next 1 year, I don't see Eicher Motors going through a big rally. It's already done that. This could easily be a period of consolidation, but you are in a good stock, so have a larger time horizon and hold on to those shares. Expect consolidation in the next 1 year and gains in the next 3 to 5 years.
All right, Sudarshan, thanks very much. Appreciate you joining in and talking to us. 88 points on the Nifty, so 10,769 is where we find the market at. We'll also get some F&O strategies. We have Rahul Shah, who's with us. He's with Motilal Oswal. Rahul, good morning. What would you recommend trading?
I think obviously we are at new time, all-time high, and a lot of stocks still looks good on the F&O space as well. So in the top of my mind is I think housing finance sector as a whole. The sector leader has done quite well today. So I think Canfin Homes in that space, I've been liking it. So I think stock has given us support at 470 or so. So I would buy Canfin Homes with a stop loss of 477 and target of 506. Second is Mahindra & Mahindra. We've seen a decent longs built up in M&M in last couple of days, and stocks looks quite convincing. So I would buy with a stop loss of 766 and target of 810. And third being metals, from the metal space, Tata Steel. Again, the stock is at 52-week high, and stocks looks a lot of longs built up in the stock, as well as in the entire sector is poised for a higher prices. So Tata Steel with a stop loss of 770 and target of 815.
Okay, all right, fair enough, Rahul. We're going to let you go on that note. Thanks very much for joining in and talking to us. So those are some F&O strategies coming in. Just look at the kind of moves we're seeing on HDFC. Forget any other financial stock in today's trade. Just look at the way HDFC is moved right now. 1,836 rupees for that stock. It's up at the high point of the day, up around 4.3% as we speak for HDFC. Let's get in a couple of comments from Keki Mistry, who spoke to us earlier over the weekend on the fundraising plans which have been approved by the bank or rather by the NBFC over the weekend.
Sometime in December, our board had met and we had announced at that time that we are looking to raise 13,000 crores. A bulk of that 13,000 crores was to be raised which was being raised was planned to be invested in HDFC Bank. 8,500 crores was to be invested in HDFC Bank. Then we had also said at that time that we need some capital for our foray into health insurance, because we believe that the health insurance market in India is huge and affords massive opportunities. And we could look at both organic or inorganic growth in that.
So the market's up 93 odd points. 10,775 is where we find ourselves at. And as Ekta mentioned before we took that break, a biggie like HDFC is seeing a 4.5% move. You heard Mr. Keki Mistry on it as we went into that break. Let's turn our attention to what's happening in the world of currencies and commodities. Manisha is here with the roundup of all of that. Manisha, good morning.
Thank you so much for that, Prashant. Well, it really is coming in from the currencies today with the dollar index at a 3-year lows. You have seen a support come in across commodity markets. So while you still are looking at 3-year highs for the crude oil prices, it is strong gains that have come in for the gold prices today. We are holding above $1,340 per ounce. It's a 4-month highs. And even as we saw 13% gains in previous year, the expectation is that the gold prices this year are expected to do even better. Especially now with the Indian wedding season having started, you are looking at buying comeback. In the last quarter, we saw Indian imports much at the higher side. Also, if you look at the whole of last year, we've seen imports gain up by 67% to 850 tons. And the markets are anticipating that this is just a beginning. And this year as well, you would look at higher imports come in. The Indian markets, of course, because of the higher prices, have seen a bit of a decline in buying. But then the weakness in US dollar, the geopolitical concerns, especially coming in from Iran, are supportive. The US has given an ultimatum to the Europe signatories to fix the flaws in agreement with Iran, or the US will pull out. Now, that is something that the markets will want to watch out for. And in any case, the interest rate hikes, 3 from US, have been factored in. So I think from here on, you are looking at strong gains continuing in case of gold prices. T. Gnansekar now joins us to talk more about that. Gnansekar, hi. What is your sense now for the gold prices going forward?
Very exciting because, it's one asset class which has really not done that much compared to, let's say, equities or other asset classes. So I think it's just the beginning at this point in time. With the dollar weakening day by day, it's clearly aiding gold prices from present levels. And, the way the dollar is looking, I think, we're going to test some critical resistance level. One of the biggest headwinds being possible rate hikes, which is only being reaffirmed by strong economic data. But I guess, those concerns will come only towards March. And as you rightly pointed out, I think the Indian demand season and even the Chinese Lunar New Year demand is going to pick up. So all these are near-term factors which could sort of push gold prices higher and break the key resistance levels. But beyond that, is difficult to say whether it will sustain. But as of now, we have a rally in our hands.
Sure. And not just gold, because silver as well. So while it's 0.5% up on gold, it's more than 1% up on silver. So would you rather bet on that?
Absolutely. We know that silver tends to sort of run away when it's actually on the move. But always it's gold which starts moving and then silver sort of catches up later. It's like a rubber band. When you keep on expanding it, eventually it just snaps up. So that's what is happening in silver. So one should be very, very cautious in silver because there is going to be a decent upside, and that will start anytime soon.
And not just precious metal, the base metals are doing quite well as well. Anything that you're picking up there, because almost all of them are trading at a multi-year highs?
I think, safely I would go with copper at this point in time, because most of them, the other factors, the fundamental factors have been priced into most of the other commodities. And as it is, when prices rise, I think demand will start suffering, which is what we're seeing in other metals. But copper, it is still not. Because overall, I think it's sort of a barometer for economic strength or weakness. And I think the speculative funds have just started moving in again. So I think there is some more decent upside left in copper. So it's any dips are to be bought for a target of close to 470 dips.